Hello everyone, here Chris Capri, founder of Second Skies. Today's lesson comes out of a request from one of our subscribers. Wanted a lesson on Fibonacci trading, so this one's for you. So this one's going to be about Fibonacci trading, how to use Fibonacci's in the markets, how we can use them to give us good support and resistance levels, possible entry and exits, and price targets as well. So Fibonacci is a mathematical tool. I'm not going to get too much into the mathematics of it. It was developed in the 13th century by Leonardo Paisano Fibonacci, and he found that a certain sequence of numbers resulted in certain patterns in nature. Well, market technicians, realizing that we are beings that are the ones creating the market and beings of nature, we have patterns as well, we started to apply Fibonacci's to the market. What happened is people realized that certain trends tend to pull back to certain levels before they continue on in the trend. And so they started applying Fibonacci percentages or retracements levels based on those pullbacks. The method here is this. First of all, you find a downtrend type leg or move. And what you want to do is draw the Fibonacci line from the top to the bottom for a downtrend and the bottom to the top for an uptrend. We're focusing on the downtrend here because we believe the Aussie yen is going to be selling off. You draw from the top to bottom and it creates those dashed lines across there. Those are the Fibonacci retracement levels. The three most commonly used are 38.2, 50%, and 61.8. There are other levels, but these are the most popular, and these are the ones most commonly used. And since technical analysis is a tool of popularity, our tools made of tools of popularity, we go with the most popular levels as well. What we're looking for is we're looking for an impulsive sell-off followed by some sort of corrective move of some sort here. Notice how in about a day's worth of time here, the pair sells on from 102.40 all the way down to just sub 100. That's 240 pips in a day. That's a very extreme sell-off for this pair in terms of daily range. Then from there, over the next 12 hours, it bounces from about 99.80 all the way up to 101.75. So about 100 pips in an hour, or in a half a day, but in a whole day it went 240 pips. So this is impulsive, this is corrective. Half the time and not even half the move there. It's actually 1/3 of the move. So that means there's less force behind this move. We draw Fibonacci's and we look for this pair to stop at certain retracement levels. Here it stopped just right around the 38.2 fib level. It actually went, if we zoom in just a little bit here, it actually went just a handful of pips past it here. And so generally what we do is we look for some sort of confirmation as well via another indicator that this is a place of resistance here. Either an upper Bollinger Band starting to move horizontal like it is here, or a declining histogram as it actually increases in price. Our intraday oscillator is decreasing as well. We'll look for something of that sort to give us additional confirmation, as we do not get in on just Fibonacci's alone. Granted, there are great support and resistance levels, but we need other indicators to get in. Now the theory in terms of profit targets is there's something called Fibonacci extensions. That means that if the pair stops at the 38.2%, it should go to the 138.2 extension. If it stops at the 50, it should go to the 150 extension. And if it stops at the 61.8, it should go to the 161.8 extension. If you believe that it's going to stop at the 38.2, I always suggest putting my stop above the 61.8. If you believe it's going to stop at the 50, then I suggest putting my stop at the 78.6. You can calculate that by measuring the distance between these two and then adding those pips on top. If you believe the 61.8 is going to hold it, and that's where your indicators show you that that area is going to hold, then I put my stop above the 100. General method is I use two lots, using my first slot to target the initial portion of the end of the move here, in this case the swing low. That'll be taking profit on my first slot, and once I do that, I bring my stop to free. Then from there, my second target will be the extension. So since we're stopping at the 38.2, we have 5 hours just sitting here right at the 38.2, then we'll go just past the 138.2 extension. And that's exactly what happens, as you can see right here. Sells off over about a day's worth of time and hits the 132 extension, and actually spends about 8 hours treating this as support before it produces some kind of bounce. Now we notice that we have another impulsive sell-off followed by a corrective sell-off here. So this means we should try and draw another Fibonacci tool in this one as well. So we draw from the highs to the lows, and actually I would actually draw from this portion of the move because this is really where the leg sold off. And so here we have the corrective move and then touch up and then boom, sell off right there. That's where the impulsiveness started. You got about 10 hours of selling and you got about 15 to 20 hours of buying here, but notice impulsive corrective move here and we're running into the Bollinger Bands, which is moving horizontal. Also notice how as price is increasing, the MACD histogram is subtly declining here. So this should give us an impetus to go short at the 50% level. What I usually do is I wait for one candle at least after I've had several indicators, either a Bollinger Band or a histogram or something showing me this is going to be a place to go short or continuation of the trend. I wait for the candle to close and then I get in on the open of the next candle. Let's follow this trade and see how it works out. Here we have a little bit of a bounce, tries to come back, doesn't quite do it. And then look at these candles right over here. 2 candles, 2 hours, closing right at the top here. Small wicks past it, but not getting past the 50% fib here. And so here they are. Ooh, interestingly enough, we do test the 61.8. Now take a look at where the 61.8 is lining up. It's lining up with the swing low on August 1st here. This is where we had the touchdown before we had a bounce. This is a great confirmation of a row reversal level, and now it gives us further confirmation. Even though we're just only 18 or 20 pips underwater, we now realize, hey, this is coming to a row reversal level. If it's going to reverse, it's going to do it here. Also notice increasing price, declining histogram, further supporting our trade. And the angle of the Bollinger Bands is not as sharp as it was when it was selling off, suggesting corrective move and impulsive move downward to follow. Well, after spending about 6 hours treating the 61.8 as support, 7, 8, 9, 10, and now a total of 15 hours, it starts to sell off consistently with over 7 hours of consistent selling. We break below the 38.2, we re-attack the 20 EMA, and then after spending a few hours treating the 38.2 support, we start our sell-off again. And now after a little bit of bounce, the move starts to get really aggressive and it starts to walk the bands here. This is affectionately called the walking of the bands here. Now zooming in just a little bit further and down a little bit, we can see, hey, are we going to make it to our 150 extension? And boom, there we go. Touch our 150 extension without much of a problem there. The end of the move there hit our profit target. Once we hit here, remember, you want to take profit and move it to free after that. One beautiful example also of how this works, even on longer time frames, that was an hourly chart. We're going to move on to the pound yen, which had a very elegant head and shoulders pattern here. We had a nice little head and shoulders here, had a nice little neckline lining itself up. One other thing that was also happening was we had this nice little 61.8 retracement, and notice how it created a double top here with waning MACD histogram the entire time, giving us a great opportunity to go short, and this should make it to the 161.8 extension. And after a little bit of work around here and bouncing off the 50% fib, we broke through that and hit the 161.8 extension. 5 months later, 3,900 pips on the board there. So it just shows you how powerful these profit targets can be. In conclusion, the main Fibonacci ratios which you want to remember are 38.2, 50, and 61.8. 50% was actually not part of the original calculation or the mathematical formulas behind Fibonacci, but market technicians so often like to think in mathematical ways that we ended up using 50% because I think most of us found that sometimes trends like to at least retrace half of the move before they take off in the next direction. Other things to notice about it: if the trend holds its directions, Fibonacci retracements along with other indicators should take the position to the extension as long as that trend continues on, and it's usually great price targets. Extensions themselves are created by adding 100% to the retracement level. Thus, if it stops at the 38.2 retracement fib level, it should go to the 138.2 extension, 50% should go to the 150, and 61.8 should go to the 161.8 extension. One other thing to know is fib levels themselves are not sole reasons for entering a position. Look for combinations. Look for them to be supported by indicators, oscillators showing divergence, other support and resistance levels, pullback areas. Look for there to be something else, but do not take fib levels as trades in and of themselves. You want them to have multiple things that are supporting it. And the last thing to use is, or to notice, that they're great if used during corrective moves, which follow after an impulsive move. So if you have a nice impulsive up or down move, if you see that the price action after is corrective, pull the fib, and if you see it going to a retracement level along with other indicators in combination, that usually often leads to a great area to get in and out of the position. Okay, so for some of you there that are looking to take your trading to the next level, we specialize, and I specialize in private education and mentoring. I like to pour all my energy into a trader inside 1 month and take them from wherever we're at to a level of profitability inside a month. I do this every single month to traders all the time, no matter what their level is. Where does this trading actually come from? Well, some of the systems that I'm teaching are all part of the 2S Sniper system. Maybe you don't want the private education, but you're looking for a systematic way to trade. This will save you 2 to 3 years worth of work, and it'll give you a professional, institutional grade strategy way to trade the markets. And so this way it'll save you time and money because you won't have to do the research. The system does it for you. If that's something you're interested in, the Sniper system is the way to go. Some people also like trade signals and live market analysis to talk to somebody and get feedback throughout the week. I give 2 of those throughout the week. Now, if any of these services sounds interesting to you, email me info@2ndskies directly, or you can visit our website, www.2ndskies.com. Until then, good hunting, everyone.